you're watching the market right here on 80 now. We're in the month of September, 4 months, and the year would be gone. But yeah, off late, the markets have really done nothing. While, of course, this year is going to be remembered that of a historic one. But off late, all that we've done is... Sorry.
The month of September.
Because it's the 1st of September,
Yeah, but here
Nikunj.
is
How
still like
time
6 months
flies.
away.
4 months.
Yeah, but still.
That's
am I
it.
That's
missing on
how time
something?
flies,
I
Nikunj.
know. I just said, am I missing on something? Birthday or
Who'd have
something?
thought we're already in September? That's what we meant.
I mean, it's the start of winter. Think about it.
Yeah, just think
September,
about it.
October.
I hope the winter for the market
November,
does not
December.
start. I hope the winter for the market does not start.
But anyway, start of a new series, start of a brand new month. But yes, we continue to be stuck in that range and a tight one at that. Yesterday, of course, we tested that 19,300 print as well, breathed up that and just, lingered around that level. But we managed to snap the 4 series gaining streak actually. And the broader markets, they continue their outperformance. So we've really not seen much of an encouraging move all through this week. Nifty Bank has also snapped its 4 streaks, a 4 series winning streak that it had been latching on to. And it's been a bit of a step back, right? And I'm not talking about IT or pharma outperformance here, Nikunj, but if I just look at what the Nifty has done, fallen 2% in the August series, and the Nifty Bank with a 3.5% cut.
Okay, it's down, but it's not out. I don't
Absolutely.
think there is no
Yeah,
momentum on the
Yeah.
downside. Now, just add it up with the news flow. Let's say in last 2 or 3 weeks, you had a patchy flows from FIs. You had virtually no large trigger for large cap stocks. If at all, you've had volatility in the macro environment, and globally, inflationary concerns have made a comeback, and Reserve Bank of India also they've loaded their guns back in order to fight inflation. Now, despite that, if Nifty was down just 2% in the month of August, Bank Nifty was down just 3.5% in the month of August, and the small and the mid cap stocks, if they managed to make a new high, that just tells you that the underlying trend in the market, I think, is just on the upside. When the month of August started, the general view was it may be a lackluster month. The downside will be on the downside. The direction will be on the downside. Mid and small cap stocks will start getting jammed. But none of that happened. Despite the news flow being dry, flows being patchy, I think markets have done very well for themselves. You've had the defense wheel, it moves on. Yeah. Power was on a high voltage. Yeah. Railway stocks have done exceedingly well. So the market is not bereft of momentum. We can argue about pace, we can argue about valuations, but directionally, I guess the month of August was not exactly a dry month if you look at market from the standpoint of individual stocks, pockets and themes.
Yeah.
Okay, but just let's quickly give you a summary of how the global markets shaped up. And well, you had a pretty flattish close, but yet it was with a mild negative bias coming in. So mixed close really for Wall Street. And this is following a pretty tumultuous month that we've seen across the board. And of course, now the data point is going to be coming in terms of the non-farm payroll data today. The Asian markets as well, they're holding out actually in the green. So for the most part, it's seeing a positive trend, and that's the GIFT Nifty down about 0.2%. But let's map out the kind of trend that we've seen over the last few months. March was negative, but after that, you had 4 consecutive months where there was gains on the Nifty, at least for the entire month gone by, barring the month of August. And that's where you can see it. It was a downtick of about 2% for the entire series. And the reason, Nikunj, we were bringing up the month of September is also because of the fact that historically you have seen that cyclicality play out in the month.
September is a time when you don't normally get a lot of triggers. Earnings season starts from
dry.
October. You pretty much get a sense in which way the second half of the earnings calendar would move. You get a lot already from government in terms of GDP, tax estimates. So historically, September has not been a month where you can actually call the market. It's more like even Steven, and there is a lot of cyclicality. We expected the same for August as well, that there would be a lot of volatility and there would be a lot of cyclicality. But I think one thing is evident, and I purely look at the trade setup, is that the interest in the interest by the FI and by the retail and by HNI in the F&O market, because we're also starting a new series today, I think is light. So this market or the options data or the setting on the table is telling you that the commitment levels are low. Now, when commitment levels are low, that could be an indication that there is underlying disbelief or fear, or if there is a bout of short covering rally, this market automatically will turn very sharply. So I don't know what sequence will play out, whether it would be this light positioning of the market is an indication that commitment levels will remain low, everybody's expecting the market to go low, or because positions are light, little bit of turn in Bank Nifty, little bit of comeback in some of the IT stocks can actually force the short sellers to run for cover, because markets are just dilly-dallying. It's like ping pong happening from last 15 days. So directionally, you will get a sense in September. I mean, August, we've not got a directional sense. The headline for August for benchmark indices was that it was in a range. I think hopefully in the month of September, you will get a pronounced trend, which is what it appears.
Yeah. But I mean, is the setup looking any different for the month of September?
It's different because commitment levels are low. It's different because the FI positioning is different. It's different because the total net open interest, what you have at the beginning of the series, it's not there. It's different because the Nifty premium, what has been observed in last couple of series, at the beginning of the series, both for Nifty and for the Bank Nifty, is not a very heavy premium. So obviously the trader knows that you do not want to commit a lot at the beginning of the series, considering that last 15 days the Nifty has not given you direction. I mean, you talk to Kunal and Nooresh on a daily basis, they would tell you that it's a toss of a coin, 100 points here, 100 points there. And you are going through that phase of the market. Now, whether this is base building, calm before the storm, very difficult to call right now. But I think, in my book, I think markets have done much better than what we were anticipating in the month of August. Despite a flat Nifty with a downward bias, I think mid and small cap stocks, they've substantially surprised us.
Okay, and despite the fact that we're not likely to see too many cues, Nikunj believes that there could be some sort of a trend or direction for the markets that will be established this month. But let's also take cognizance of the kind of macro data that came out. The GDP for India grew about 7.8% in the April to June quarter. You also had the GDP print, which I think pretty much came in line with what the street was expecting, with the April to June manufacturing sector growth coming in lower at about 4.7%. So Nikunj, how is one really to read into this GDP print, given that I think at least the GDP growth at 7.8% would be taken down well?
No, it's a surprise, and it's a big surprise. Now for the full year, you could be in the range of about 6.2 to about 6.5. So 6.5% for FY24, I think is a very realistic kind of a number. And this is for the second quarter. Largely, the growth momentum has been robust. I was looking at the fine print. The demand momentum is largely because of what is happening to the domestic demand, how credit offtake is moving, and we are talking about a patch when the rural economy has been under pressure. We're talking about a patch where the agrarian, where inflation in a sense was not strong and supportive. What is important here is that the government spending, I think, is going to be strong in the second half of this year, since we are talking about only 4 months are left. So it's going to be strong. GST tax collection has been decent. The indirect tax collection has been also, direct tax collections also have been decent. So net, I think this is a positive number. This is a number which just endorses that you are one of the fastest growing economy in the world. And at a time when other economies are struggling, we looked at the data which has come from Europe. We know what is happening in China. Directionally, the bent of your GDP growth, I think, is strong. The estimates are believable now, and I will not be surprised that if all goes well in the second half of this year, we could be in for a mild upgrade on the print rather than a mild downgrade. The concern which everyone thought post what happened, let's say, post what's happening to the rural economy and how monsoons have been erratic, that you could be in for a mild downgrade. I think post yesterday's number, the mild downgrade becomes a mild upgrade now.
Absolutely. Okay, that's that on the GDP print. Let's tell you what the GIFT Nifty is up to. Well, nothing different than what it has all through this week or the last fortnight or so. Absolutely quiet, though with a little bit of a negative bias. But on that note, let me take it across to Vinny, find out what the global commentary has been overnight. Vinny?
Good morning. And talking about the global commentary, let's start with Mohammad Al Arian. Now, he's talking about the China numbers that have come in, and he said, yes, they may look a bit better, but that is not going to change the sentiment that is there in terms of the pessimistic sentiment as well as the narrative for China's growth prospect. And even as the government is considering additional stimulus measures, the pessimism maybe is something that could continue. The second commentary he made was on the Eurozone inflation data that came in, and he said that, for the month of August, that was at around 5.3%. That remained quite unchanged when you compare it to July as well, and obviously that keeps alive the hope that ECB could actually consider a bit of a pause, and that is a factor that he's highlighting. Even Holger is talking about the disinflation pause that could be possible, looking at the Eurozone inflation that has remained stuck at 5.3%, especially in terms of the core inflation, which excludes volatile energy, food, alcohol and tobacco prices. That are mainly some of the measures that are watched out, is something that we should watch out for in terms of these inflations and volatility in these over here in terms of the pricing for the ECB measures that they would take for this inflation. Other than that, we have the commentary that is coming in from Peter Schiff as well, where in terms of first commentary is on crypto front, where he's highlighting how many times is one actually supposed to look at the cryptos pump and dump. At one point of time, you see that increase coming in the Bitcoin that's spiking by supposedly some good news over there, but all the gains then are quickly reversed as well. So yes, the whales pump up the prices and then they use the hype to actually dump the Bitcoin until the FOMO of buying dries up and the prices collapses. So that's a caution, maybe some sort of that he's giving in terms of Bitcoin as well. Other than that, he's highlighting in terms of the oil prices that have spiked up a lot, and the oil prices, he says, has jumped, over 20% when what we've seen in the last 3 months as well. And that doesn't look very good in terms of the economy, how it's poised to return to that 2% inflation anytime soon. So that's a factor he's highlighting as well. Other than that, in terms of consumer spending, also he believes that, consumer spending is more and saving is less, and the Fed is not making any real progress in terms of fighting the inflation. So that is a worry coming in from him as well. Other than that, we have commentaries coming in from some of these Fed presidents. One is Susan Collins, who's highlighting that it's important to better understand the issue leading to the wealth gaps that help draw more people into workforce and boost the economic growth and competitiveness. And the second commentary is from Fed's Bostic, who's highlighting in terms of the monetary policy. He said that it's already quite tight, and he to bring the inflation back down to over 2% in a reasonable period of time, and one should actually watch out and wait for this to actually play out instead of taking some more further measures. And this restrictive policy, he believes, would work out over some period of time. So that's the commentary and global comments that we have coming in this morning.
Okay, on that note, Vinny, we'll let you go. Thanks as always. Let me welcome on board Kunal as well as Nooresh and find out what the trade setup is looking like. Gentlemen, hi, morning. Kunal, once again, the GIFT Nifty is indicating a quiet start, but we're also kickstarting a brand new series. Tell me what the market construct is looking like for this series.
Well, we've ended the series of the, in fact, the August month entirely in slight negative note, 2%, 2.5% down for the Nifty, and 3.5 to 4% down on the Bank Nifty. But then there are, there have been good parts and difficult parts about the markets in this series so far, because we've seen emergence of the media sector, metal stocks making a very good comeback. Chemicals have made a very good comeback in the last couple of trading sessions, short covering in many of the PSU banking stocks, etc. But on the other hand, there has been definite underperformance in the FMCG, the private sector banking stocks, etc. Net, when you look at the last 5 or 6 months of price movement, after 5 consecutive months, this is the first month where we ended the index on a negative note. So we will call this as a mild consolidation or a correction in the process of a strong uptrend. 90,300 still remains to be a key pivot. So even though we've closed below that level, but the margin of closing is very, very tepid. So we'll probably wait out for a decisive close below that 90,300 mark, say by a margin of at least 100 points, and then look out for initiating fresh positions.
Okay, yep, after 4 months is when we wrapped up in the red for the month of August. Nooresh, let's get in your take then. How do you see the month of September shaping up? Yesterday was a close of with a downtick of about 0.5%.
So we could be looking at a fresh start on a lot of stocks because what has happened for the whole month of August is we did not have a trending move anywhere, at least in the top 100, 200 names. It was very, very selective. The heavyweights did nothing. And at the same time, the Nifty also ended up at the same place. We've been in this tight range, 19,250, 300 on the downside, 19,600 on the upside. And the case is right now from today onwards or by next week, we could see much more, say, trending moves across the heavyweights also. So watching out for stocks, we've started seeing some names like a Mahindra and Mahindra hit a new all-time high, Maruti hit a new all-time high. So the stage is set for trending moves for the month.
Let's talk individual stock ideas as well then. Nooresh, on your list?
So first would be a buy on Mahindra and Mahindra. The stock has hit a new 52-week high. A flag formation continues to be the leader in the auto space. Out here expecting a short-term move towards 1700 plus, stop loss at 1550. Second is a buy on NMDC. The stock is on a dividend adjusted basis about to reach a new 52-week all-time highs. On a normal basis, should see a further momentum on sustaining 125 levels. Good relative strength over the last 3 to 5 sessions, indicating a possible breakout move going forward. Stop loss at 118, target price of 140.
Okay.
Let's find out first, actually, Kunal's top trades before we proceed. Kunal, what is it that you're betting on today?
So I'm betting on a differentiated set of names. IDFC First Bank coming back into some sort of a price action the last half an hour on the expiry day yesterday. So expecting this could be a breakout move. 108 as a target, stop loss at 88 for IDFC First Bank. And Havells is a stock which I think is getting up for a very strong and a huge breakout on the weekly and the monthly charts. So would expect the stock to catch up steady momentum going forward. 1400 as an immediate target, stop loss at 1355.
Okay, there you have it. Those are the top trades being flagged off by our chartists. But let's move on. Anisha Jain is with us right here in our studios to discuss the stocks to watch. Anisha, no Nevada Power for you, sorry, but we'll be discussing individual stocks, and let's talk about the auto sales numbers.
Oh, well, yes, the auto sales data will be in focus, and the entire auto stocks are as it is in focus. Maruti has hit a record high. Royal Enfield is going to launch a new bike today. So a lot of excitement towards the auto stocks. In the last month, in the last series, we haven't seen much action from auto. So maybe it's ripe for a bit of a momentum as well. Now, all segments seem to be gearing up for the festive sales. The two-wheeler is seeing a sustained recovery in the domestic demand. Even if you look at the commercial vehicles, that space has been doing well as it is, and that's expected to continue. Maybe the fleet utilization might be a bit weak because of the seasonality in the month gone by, but otherwise we are seeing a bit of a momentum there as well. Passenger vehicles, there we'll have to watch out for what happens to the inventory, because we had heard the commentary coming in from Maruti as well that it's sitting at a 4-year high level. Whether they'll get into deep discounting to kind of offload that or not is something that we'll try to decode from the kind of commentary that we get from the press releases. For the tractor, the higher reservoir levels and favorable crop realization is something that is auguring well. And I was just going through the numbers on a month-on-month basis. We're expecting a good uptick from Bajaj Auto there because the export situation might have bottomed out. Hero MotoCorp is expected to show a good traction as well. However, for tractors, M&M might show a dip on a month-on-month basis. So these are the numbers that we're watching out for. But overall, the auto sales data seems to be ripe for that festive season.
So Nisha, I think next 2 months auto sales would be difficult to call, and I'll tell you why they would be difficult to call is because this time Diwali is delayed and last time Diwali was earlier. So the month on month and the year on year comparison may not be realistically true. Also, 2-3 months ahead of the festive season, you don't know what the real demand is and you don't know what the real inventory built up is. Please bear in mind that the data what we report as monthly dispatch numbers, this is the company's dispatch. This is not the retail offtake. So you could actually see an uptick, assuming that what we heard from Maruti, that companies, they want to build up inventory level. They could be building up inventory level because you are anticipating a strong demand to come back. I mean, if you're a luxury car maker, if in the SUV space, you may be looking at building up inventory level. So that may not be a realistic picture of what the real underlying demand is. So that's the overarching theme. Within that, let's get into specifics here. I think two-wheeler sales. They are important because that's one sector where there is no recovery whatsoever. And I don't think we are in for any kind of a recovery. That is my understanding when I spoke to the management of Bajaj Auto and, one understanding of channel checks. When I say recovery, I'm talking about a marked recovery. So it could be low single digit, it could be, mid between 4 to 5%. That may not really augur very well from a repositioning standpoint. And then the good old comparison of Maruti versus Mahindra and Mahindra. I mean, is Maruti really getting their act together and regaining their market share in the SUV market? So that's one number which is important. Then you got to look at the template in terms of where the thesis for where the pre-sale built up would move, and then CV, I don't think anybody's worried or anybody's thinking anything negative from the CV space.
Yeah, CV has been doing all right. Passenger vehicles is doing okay. Two-wheeler is something that we need to watch out for, and the dynamics within passenger vehicles and the entire EV split and the new launches and all of that is something that we need to watch out for. But the other one that we need to talk about is, of course, from the pharma space, Cipla and Torrent Power. Remember, yesterday my colleague Cheryl broke the story that Torrent Pharma is looking at picking up stake in Cipla, and that they might be doing it via a mix of funding. They might be looking at pairing their own stake to raise the equity for this transaction. Plus, they might be looking at a consortium as well as debt as well, raising some debt to fund this acquisition. This might trigger an open offer as well if they are able to pick up the entire stake of the Hamid family, which is around 34% if I have it right. But very interesting there, because Nikunj, Torrent Pharma is usually a bit conservative. They do not come up with such large acquisitions, and if it does fructify, this would be a really, really large one, and creation of what, the second largest pharma company?
Yeah, first it was the Cipla promoter selling out, that was the story, and then Torrent, they really threw their ring in the hat, so to speak. That was the second. Now what we understand, again, sources based from, Shell has reported this yesterday, which is that things progressively for Torrent Pharma could move, because they will if you have to acquire such a large asset, you will have to raise equity, and in this case promoters are looking at selling their equity. So I think for me the new development, again source based, is that how Torrent Pharma will really manage this kind of a large acquisition. If the promoters are looking at selling their stake in the open market and their ownership is very high, could it lead to supply in Torrent Pharma? B, that also means that for a Cipla minority shareholder thinks it could be a marriage between Torrent Pharma and Cipla, not the P investors. And C, for Torrent Pharma shareholder, if the supply actually increases, what it means for the near-term demand-supply situation, and what it means for Torrent Pharma 3 years out, if they're really able to get the Cipla and Torrent Pharma merger going. If I have to look at the history of the pharma space in India, Anisha, I think very few companies have been successful in turning around acquisitions, and Torrent Pharma is actually one of them which have successfully turned around acquisition. Even Sun failed with Ranbaxy, and Ranbaxy failed in several other acquisitions they did. The Japanese have failed, the Americans have failed, the Indians have failed, but Torrent Pharma has actually managed to do it. So I think it's not like a shot in the arm. They're not whistling in the dark. They've got the numbers ready. But in the near term, if they are looking at selling 20% stake, that means more supply would emerge for an illiquid name like Torrent Pharma.
Yeah, absolutely. In fact, let's take it across to Cheryl, find out what exactly her news break was yesterday.
We've learned exclusively from our sources is the fact that yes, Torrent Pharma is looking to bid for the Hamid family stake in Cipla. Along with that, what we're additionally hearing this time around from our sources is that the promoters of Torrent Pharma are likely to look at stake dilution as one of the options. And what we are picking up from those sources is the fact that they may look to dilute approximately 20% stake in the company. Currently, the promoters hold around 71.25% stake in the company. So they may look at some offloading of that stake in order to fund the stake buy, that is the Cipla, Hamid family stake in Cipla. Alongside with that, what we are also picking up from the sources is the fact that Torrent Pharma promoters have already lined up debt from foreign lenders, and if they are going to look at going ahead and bidding for the Cipla stake, they will be looking at bidding via a consortium of Ps as well. Remember the fact that Hamid family stake buy is supposed to be an all-cash deal. Therefore, the company or the promoters are looking at various options or other combination of options in order to finance this particular stake buy. Some of the key notes is the fact that Cipla and Torrent Pharma both are cash generating businesses. Also the fact being that as per analysts, what they are saying is the Cipla stake buy may trigger an open offer. This if Torrent Pharma is looking to bid for the entire stake, which is approximately 34% stake. So if they're going to go ahead and bid for the entire stake in entirety, then that would trigger an open offer, which would mean that they would need approximately $6.5 to $7 billion for this particular stake buy. Also the combined entity will also be the second largest Indian pharma company by market capitalization in this, yes, if the deal goes through. And also the combined entity would have revenue of approximately 32,000 crore rupees and EBITDA of approximately 8,000 crore rupees. We did try to reach out with the management of Torrent Pharma. They have not responded to ET Now queries. But yes, for now, what we are picking up from the sources is that the promoters may likely look at partial stake sale, also raise debt from foreign lenders, and also look to bid for the stake with a consortium of PEs.
All right, that's the exclusive news break. Thanks very much, Cheryl, for giving us those details. Meantime, let's listen in to what Sameer Arora had to say. He believes that banks are in a good space and he believes that HDFC Bank, that's their biggest contra bet.
Broadly, in a big picture sense, if we look at our history, it'll be 50 to 60% large cap. Because, we like the big fellows, which is the banks. The urban is doing well. And mostly these loans are going to urban guys or to the salaried guys or to the guys who are earning more. And also, we are not saying, and nobody is saying that this is forever, that the rural is gone forever. Then, then elections would be decided on these things. So we are talking right now in a big picture sense that if you look at the fact that the banking sector is strong and doing well and hasn't done anything for at least now the calendar year and maybe even some part of last year, and it's a big part of the market, and you are getting foreign flows, and you can buy things like HDFC Bank at 3-year-old prices. It is the easiest thing for the world to do. And in whatever way you say it, if somebody is overweight or underweight, they will buy maybe 25% financials. Many people do well over 1 to 3 year period, but then they are not able to sustain. So somebody else starts doing well or a new sector. So that we all believe, and you also believe, I think, that private sector banks have created a lot of wealth. Only 2 stocks, HDFC Bank, Kotak Bank. There was Global Trust Bank and Times Bank and Bank of Punjab and Centurion Bank and RBL Bank and Yes Bank and God knows all private sector banks. And they've done very badly,
Bandhan.
Bandhan also has not done super well. But looking at the older guys. So the point is that the long term is very difficult to see and you have very low ability to see the long term separately anyway. So on Zomato, may I say that you were the first guys we told when it was 52. The thing is when it is falling every day to come and say that we own it or we've just bought it rather than now when everybody is buying it. And they are doing well. So on the new IPO now, I haven't seen all of them, but the ones which are fellows, so broadly they are like that drone fellow and all, there's too much. I think underperformance has ended, but because we don't have it, we are not getting frustrated because of these Paytms and Zomatos and landmarks or whatever else is working for us. If it pained us, we will worry. Right now, let it be. It's not worth the effort of selling. Now it is neither hurting nor affecting at an index level, but it's still underperforming all these slightly different stocks. But so therefore, it's right now we are not thinking of it so actively just because we are doing well and everybody is doing well even if they don't have it.
Well, let's talk about all the stocks in news this Friday morning. And Saudi Aramco has hiked the contract price for propane for the month of September, which could actually push propane prices higher than gas prices next month. So Somit joins in to tell us, Somit, what exactly does it mean for OMCs and players like a Gujarat Gas?
Well, if you see, Saudi Aramco has fixed the propane prices for the month of September at close to $550 per ton as against $470 per ton, which was set earlier. Now, this prices in India will be applicable with a 1-month lag, which means that these prices will be applicable from the 1st of October 2023. On the other hand, if you see, Gujarat Gas has also increased the gas prices in the Morbi region by around $2.5 per SCM. Now, what does this mean for Gujarat Gas? Firstly, for Gujarat Gas, mostly these 2 announcements are quite positive because currently, if you see, the gas prices in the Morbi region are at a premium of at least 3.5 rupees per SCM as compared to propane. But from October 1st, given the fact that propane prices are increasing, in fact, propane prices will become at a premium of around 4 rupees per SCM as compared to gas. So from a discount, propane prices will become at a premium as compared to gas. Now, propane futures also indicate that prices would remain largely stable at around $580 to $600 per metric metric ton in the third quarter of FY24, which means that prices are continuing to remain above these levels. Now, the current volume split for Gujarat Gas in the Morbi region is largely even, which means that 4 MMSCMD of gas is coming, 4 MMSCMD of demand is coming to gas and 4 MMSCMD of demand is coming to propane. But this could largely shift towards Gujarat Gas going forward, given the fact that propane is becoming expensive, and given the fact that Gujarat Gas has also taken a price hike, which means that margins also could rise for Gujarat Gas from the second quarter and from the third quarter of FY24. So a kind of a win-win situation coming in for Gujarat Gas on this front. Now, for oil marketing companies, given the fact that propane prices have increased, this is largely neutral. It means that the over recovery that oil marketing companies were now getting by selling LPG will now be over, and analysts believe that the over recoveries that oil marketing companies have gathered so far will be sufficient for them for the rest of FY24. So not much losses coming in for the oil marketing companies even going forward. So largely neutral for oil marketing companies, given that propane prices have increased.
Somit, the other thing is GRMs also have been on a downtrend, right? So which sectors will that impact?
That will be a big negative coming in for the oil marketing companies, given the fact that marketing margins were already languishing, and now gross refining margin, that is on the refining side, has also seen a sharp drop from $15.4 per barrel. That rate we had seen just 5 days back, it has come down to $10.6 per barrel rate. Now, this will definitely impact all the oil marketing companies like Indian Oil Corporation, BPCL, HPCL, but this could be much more negative for pure play refiners like Chennai Petro and MRPL. Now, given the fact that the windfall taxes could also increase going forward, because government usually follows a lag prices. So in the last 15 days, GRMs were on the higher side. So if that prices are followed and if windfall taxes are increased, then the margin squeeze for players like MRPL, who have a significant revenue coming in from the exports, could be higher going forward. So majorly negative coming in for pure play refiners like MRPL and Chennai Petro, and also negative for oil marketing companies like Indian Oil Corporation, BPCL and HPCL.
Okay, thanks very much, Somit, for giving us a roundup there. Let's move right on then. And Eicher Motors will be launching a refresh of the Royal Enfield 350. We've got JP Morgan as well reacting to that. Let's take it across to Vinny, who joins in with what exactly that new launch means. Vinny?
Absolutely. So in terms of the launch, that is Royal Enfield launch, that will be a fresh Bullet model that is coming in, Bullet 350 model. And this model already has around 17% volumes if you compare as of date. JP Morgan, after this, is actually maintaining a neutral rating with a target price of 3,050 rupees per share for Eicher Motors. What they're highlighting in terms of the note is that Bullet is a very important product for Royal Enfield, especially in the price range of below rupees 2 lakh price point, and as of now, Hunter was the only one which was supporting the growth in terms of volume in the recent times. So that is something that is going to be important to watch out for, because Bullet may actually be important launch in terms of the growth stagnation that they've seen for classic or meteor category, and the rising competitive intensity in more than 2 lakh rupees price range category, especially coming in from Balaji's Triumph, Hero's Harley and Honda, are something that was impacting Royal Enfield. So maybe this launch is important to watch out for in terms of that front. Obviously, what they are also noting is that Royal Enfield's volume growth over the past few quarters has been mainly driven by Hunter, where it was almost around 22% volumes. What they saw coming in was from Hunter itself. So this launch is maybe something that it could improve the volumes of Royal Enfield as well, and the significant revival in Bullet volumes may lead to a near-term outperformance for Royal Enfield, and obviously in terms of Eicher as well. Pricing is going to be an important factor that they are watching out for as well, and Eicher's valuations should derate versus the historical pricing that we've seen coming in, is the highlight that has come in from JP Morgan.
Okay, Vinny, we'll leave it at that, and let's come back to large block deals that happened this August. In fact, you've seen names like from Sula Vineyards to MedPlus Health to Prudent Corp. Sharad, highlight all the block deals that have happened and what are the trends that are emerging.
Well, yes, at first we are having Sula Vineyards in focus, and of course do remember that PE firm Verlin Investment Asia, they have sold roughly 13% stake and the valuation is coming more than 500 odd crore rupees. But the absorption, the buyers coming in include Societe Generale, Morgan Stanley and also Indian mutual fund houses. Apart from this, also MedPlus Health Services would be in focus, where Premji Investment and Lavender Investment actually sold stakes of almost 12% stake, almost 1,207 crore value, and the absorption was taken by Fidelity, Funds, Government of Singapore, and also Nippon India Mutual Fund. Also, the third stock would be in focus would be Prudent Corporate Services, and as rightly pointed out, the seller was TAFDI Investors. This is a PE firm. Roughly 9% stake was sold for 420 crore rupees, while the absorption was coming in, and the buyers were marquee names such as Abu Dhabi Investment Authority as well as DSP Mutual Fund. Now, also do remember that the month of August has been very strong when it comes to the selling portion coming and what was reported in the block deals. And you're looking at the numbers from January itself, the numbers were below 10,000 crore mark, but then in the month of March it spiked to more than 30,000 odd crore rupees, and from July till August also we saw more than 80,000 crores of block deals happening.
Thanks very much, Sharad, for those details. Let's move right on and hear it out from Sanjeev Bhasin of IIFL Securities, listing out his top bets within the auto space.
I think that rural incomes are now going to charge up some of the two-wheelers. So 3 names which we are holding and which we are advocating: Maruti in the passenger vehicle, Ashok Leyland in the CV segment, and Bajaj Auto in the two-wheeler segment. All 3 in their categories are market leaders and will only gather momentum. In the mid-cap, if you want, you can chase a Bosch closer to 18,000, because in the OEM space, that is one stock which is pedigree and which has initiated and invested large amounts into semiconductor, the returns of which will be played out maybe in FY24.
Ideas coming in from Sanjeev Bhasin. But after India saw the driest summer in about 100 years, some relief is expected on the monsoon front. That's the word coming in from IMD, and they said, watch out for September. It's likely to witness normal rainfall in the range of 91 to 109% for the long period average. Let's hear out their address yesterday.
There will be reversal. There will be a change in the trend of rainfall activity as compared to August. While August was highly deficient, in the month of September, we can expect the normal rainfall activity. During the month of August, on most of the days, rainfall was less than the normal. Only in the beginning, of 1st to 3rd August, and in between, around, say, 23rd to 25th August, there was normal rainfall activity. Otherwise, most of the days we have the deficient rainfall activity. And at present also, if you just look at it, is the deficient rainfall activity for the country as a whole. Now, if I consider the diagram below, that is a rainfall deviation from the normal, it's called a standardized rainfall anomaly over the monsoon core region. That is almost central India, you can say. You can also find that in the month of August, these are all the red bars downward. These are all the days when rainfall was significantly deficient. So what I want to say that in the month of August, there has been weak monsoon conditions on many days. And there has been a typical break monsoon period with, you can say, from 6th of August and extended up to 16th of August. That is the first spell. Then there was another 2 days that you cannot say that it's a spell, but afterwards again, it started around 26th of August, and that spell is continuing when rainfall is significantly lower than the expected.
All right, let's move right on then. And decelerating demand for credit woes weigh on the credit growth for the banking sector. The growth for the month of July was down about 14.7%. Meanwhile, the overall industry growth as well was down 5% on an annualized basis. My colleague Harsh joins in to put those figures into perspective. Harsh?
Right, so June saw very strong credit growth, and Q1 overall also has seen very strong credit growth. So we are coming on the back of a very good credit tailwind, as we can call it, and credit growth continues in July when I'm looking at it on a year-on-year basis. But one small adjustment. What we've seen is that HDFC Bank, the combined entity, is what is reflecting in terms of the numbers, but if we exclude HDFC Limited for comparison purposes, credit growth has come in at 14.7, 14.8% odd in the month of July on a year-on-year basis. Also, year to date, we are seeing credit growth of around 3.7%, but month over month, credit growth has actually declined by 1.4%. So, what's firstly staying elevated in terms of those credit growth numbers? We are seeing credit cards go up by 2.2 odd percent on a month-on-month basis. Vehicle loans up 1.1% month-on-month, and PSL housing seeing a stronger uptick of around 3.8% month-over-month. They were the key segments which grew in the month of July. So overall, on the retail front, we're seeing 18.5 odd percent of growth. Slightly moderating from that 20% growth number. Let's also look at other segments. They've largely declined on the higher base of June, as I did mention. Medium industry slid around 3.5%, NBFC slid 3.3%, and we saw trade as well fall around 2% month on month. In terms of the lending spreads as well, we saw positive news on that count. PSU lending spreads have gone up by 21 bips month over month versus the 12 bip decline in June. So a lower base contributing to that effect as well. And where private banks are concerned, they've managed an uptick of 2 basis points on top of the 21 basis points in June of 23. So that's definitely a positive. Let's talk about it going forward. Of course, strong numbers in June, slightly weaker in July, but going forward, we have the festive season coming through, and there is some amount of optimism that credit growth will be pushed upwards, and even the estimates for the full year FY24 will be revised upwards on the back of that.
Okay. Right, Harsh, we'll leave it at that. Let's now discuss stocks wherein the technical indicators are showing overbought on the RSI. Kunal, you've been digging this data. Firstly, help our viewers understand what are RSI indicators, and when the stock is indicating overbought, does it mean it's going to top out, and are we going to see a massive crash from there?
So RSI is a very, it's the first most important indicator in technical analysis, and it helps to gauge whether a stock is overbought or oversold. So in a very nutshell, one simple line is that it tries to identify the strength on strong days and whether it is stronger as compared to the weakness on the downward days for the indices. So whichever is the relative strength or the side which gets more relative strength is the way the market or the indicator shapes up. Now the best barometer is to look at 0 to 100. 100 or closer to 100 is the overbought, extreme overbought territory for the stock. So as you can see that there are so many stocks which are showing extreme overbought territories on the charts historically. Adani Enterprise was one of the stocks. We'd seen Ajanta Pharma as one of the stocks. Bajaj Finserv, in the historical yearly charts had shown signs of extreme overbought nature on the indicators, and you saw the stock going into a sharp correction. Same was the case with Balkrishna Industries. Again, the indicator coming back into an overbought territory and the prices falling very sharply post that indicators coming into overbought territory. Atul Limited was a very recent one. I think 2021 is where the stock had made a major top at 9,000 odd levels, and stock has corrected almost 2,000, 2,300 points from those levels. Now the two charts which are actually emerging as, so there are many charts, but then the two ones which merits focus, one of them is Trent on the yearly charts. Again, after a fantastic uptrend over the last 7, 8, 10 years, the stock and the indicators have come back into an extremely overbought territory on the yearly charts, which means there is a very high degree of probability that for the next 2 years, the stock should see a very sharp correction, maybe in the margin of 30 to 40% at least, given the time span of the next 2 years. And on the short-term charts, that's on the monthly basis, Power Finance is one of the stocks which is showing signs of overbought nature. The stock actually yesterday corrected 5%, but then the margin of correction generally is around 10 to 15% in such kind of monthly charts as well.
Okay. So you are of the view that a stock like Trend should correct 20 to 30%?
Yeah, 30 to 40% at least for Trend.
Which is the other one you said apart from
Power
Trend?
Finance.
There are two stocks which could correct 30 to 40%. Power Finance is unusual, right? PFC.
Yeah, PFC.
I mean, it's like a PSU stock, and
but the stock has run up already from 150 is where the rally started to almost 280, 275 where the stock is trading.
What has been exception to this?
There are hardly any exceptions to this.
Okay, so for you, it's end of the road in the short term for some of the stocks.
Exactly.
Anything above 90, just time to get out.
So what we are talking of is not 90. We are talking of 99.9 in most of the cases as an indicator.
Nooresh, anything which to your mind is a red flag or there could be an end of the road if you're a bull, at least in the medium term, short term?
So it is tough to take a call on topping out unless and until we start seeing a reversal signal as well. So PFC yesterday saw a bit of volumes, but on the basis of MSCI reject. So if it continues to see follow up, then maybe PFC could see some correction. Would be say 15-20% from the top, which is classical in a stock which has overrun. Same is the case with Trend. There could be some names in the new IPO segment which are in the EMS space. So apart from that, say there is shipyard space in the which is where you have a lot of Mazgaon Dock and GRAC. Those are the names which come in the overbought stage. They could correct 15-20% from the top.
Let's change gears and talk about PSU banks and where do they stand right now. And PSU banks, if one really looks at it, they've hardly participated. In fact, the decline in SBI started first, and now BOB and Can Bank, they've also started chipping in. For this year, SBI is down. Bank of Baroda is actually flat. Union Bank, I don't think the price changes are going to be great. Can Bank also, if one really looks at the change here, the price change in Can Bank also about 4%. So for the year, PSU banks have turned negative or it's a flat line. And this was the go-go sector, right, Nooresh? Go-go sector of 2022.
So we are seeing a rotation in the PSU banks. We saw a lot of the smaller names make a flash move back in 2022. So something like a Bank of India went up to 100 from 50, then went back to 70. That is turning around. The smaller names like Union Bank of India is turning around. And it went back all the way to the same highs of 2022. The most interesting start which I look at is right now is Punjab National Bank. That looks the most promising one. Very similar to what was happening with Bank of Baroda and Can Bank. So pre-COVID, the top for the stock was around 60-65 levels. And the bottom of 2019 was 60-65. And the top in 2022 was around 62 levels, 60-62. And for the last 1 month, 1.5 months, the stock is quoting around the 63 mark. So clearly, this is the stock which is showing relative strength, trying to get closer to a 52-week high, also towards the 3-year high. And most of the, say, PSU banks, the larger ones, are up 15 to 30% from their peak COVID prices. This is the one which is still on the larger side of it, which is not 20% higher from the pre-COVID prices. So if I have to look at the space, Punjab National Bank could be the next rotation. We saw this happen. We started with SBI, then Can Bank, then Bank of Baroda, then the other names. So now the new rotation, the most interesting name would be PNB.
On with us, let's hear it then from Miran Kamarkar, the Director and Fund Manager at Dalal and Brocha Portfolio Managers. He's saying that Trent is a stock where you can see long-term growth, largely on the back of Zudio. Let's listen in.
I do believe that if I look at the past 3 years, I think they will continue to grow at anywhere between 30 to 35% year on year, especially because of their growth which they are seeing in Zudio. And I do agree that there are a lot of players who are getting into affordable fashion, but at the same time, I think they have a first mover advantage and their offerings are pretty good. So they will continue to grow there. The second sort of thought is that it is likely that they may break even in Star Bazaar, which probably doesn't get any valuation as of now. And if they do so, because they have said in their annual general meeting that their focus is to grow Star Bazaar rapidly now. And if that happens, then I think the opportunity there could be also very large.
Let me draw your attention to Asian Paints, Pidilite. I was looking at data in the morning. From last one year, they've moved into a shadow time-wise correction. Absolutely. Everybody talks about it, but last 1 year, the price change in Asian Paints or a Pidilite is flat. Could that be the story for Trent for next couple of years?
So it is not that it hasn't happened in Trent earlier. I think it was between 2012 to 2015, if I'm not mistaken, when it went completely sideways. The issue is that whether you can get in and get out of the stock at the right time, that is, you identify that now it's stagnating, you get out, you get into something else and then do well, or you hold on to the stock and you invest in other growth stocks which will help you to push your portfolio returns. And then the stock which is good or where the opportunity of growth is large, you continue to hold it. So that's what we intend to do.
And what's the view coming in from Nishal Maheshwari in terms of his top fundamental calls? Let's hear him out.
Other stocks which we like is PNC and HG Infra. So that is the stocks which we like basically as far as construction is concerned. But overall, if you look at on the capex side or the capital goods side, then I think there are some good stocks basically even in the smaller category. Triveni Turbine we continue to like basically, and then Apar Industries is what we like. So there has been quite a few smaller ones also, which still continues to be fairly priced, not very aggressively priced. So these are the stocks basically which we like in the capital goods sector. Yes, the order books have been very strong.
Okay, what's interesting is that if you look at the month of August, while the perception was IT is bad, banks are good. We were of the view that for banks, whatever could go right has gone right. And for IT, whatever could go wrong has gone wrong. And what have we seen in the month of August? There you go, sir. IT index up 5%. Bank Nifty down about 4%. It's like a mirror image, right? Now suddenly you've got algorithms which are buying IT and selling banks. That's how things move. I mean, when there's momentum, algorithms will move that way in terms of catching the next momentum trend. For the year, however, Patricia, let's look at the IT index for the year and the Bank Nifty for the year. The Bank Nifty actually has started underperforming. It has started underperforming just about every major index. In this year, IT index is up 9%. That includes that infamous or famous profit warning which came from Infosys. That, including that also, IT index is up 8%. And Bank Nifty, despite this consensus buy, is up only 2%. Nifty, meanwhile, in this year, look at it, has done much, much better than what the Bank Nifty has done. And that, in a sense, is an indication how sometimes consensus gets challenged and how sometimes consensus is viewed. The Bank Nifty is up 2%, Nifty is up 6%, and the IT index has managed to beat the Nifty and the Bank Nifty. Kunal, hello. It's ulta hai.
Yeah, in fact, you'll be more amazed that the internals between the banking index, the private sector banks is actually up 5% this year YTD, and the PSU banking index is also up 3.5%.
So नीचे क्या है फिर?
So that's
I think HDFC Bank.
I think HDFC Bank is the
SBI. SBI is down 8%. So if SBI is down 8% and HDFC Bank has done nothing, those two sumos on one side, I mean, it's like a beam balance where two big heavyweights on one side.
Yes.
वो seesaw होता था ना बचपन में. One heavyweight and the seesaw comes down. It's that Avan's daughter is that age where she'll be in that seesaw age, right?
Yeah, absolutely right. Let's find out where else we're seeing that seesaw happening. We've got Amnish Agarwal who's joining in. Amnish, hi there, morning. Let's get in a sense as to how you're reading into this kind of movement that we've witnessed, the whole IT, banking space, and what is your key takeaway?
You see, the main thing is that there is a typical sectoral rotation which is at play. For example, banking was one of the best performing stocks last year. Segment last year, but if you look currently, there is no incremental trigger which is left in banking. For example, we might have seen already the best of the names, or maybe in another quarter or so, the names will, you can say, more or less peak out, and there are some early concerns which are now being raised in some quarters that the next NPA cycle or some credit recovery issues might come on the credit card side or the personal loans. So I think the banks are reflecting some sort of a fatigue at this point of time, because whatever good was to come in terms of numbers, whether you look at growth, whether you look at, you can say, NPAs, credit growth, profit growth, it has come last year. This year is going to be maximum, I think, 8 to 10% growth as far as the bank Nifty is concerned. And I think one needs to look at, say, next few quarters. I think it will be consolidation for banking index for some time to come. Now, contrary to IT, I would say that post, say, last year, in the last year and a half, we have seen actually IT index, you can say, the P multiples have corrected, earnings have been cut, but more or less you can figure out that whatever negative was to happen, so all the negatives are there. So it has been more like a contra buy for us also from the last, say, couple of quarters. And I believe that as we go along, and if the kind of negativity market is factoring in, whether it is US markets or other exports, that doesn't come through, then I think we might have already found the bottom as far as your IT index and stocks are concerned.
Fair enough. Meantime, we've been seeing, Amnish, this sort of dizzying rally play out within the entire defense and railway space. Do you believe that there's more steam yet to go, given that there have been, for instance, triple-digit returns for some of these companies in the last few months itself?
You see, one of the reasons these are two very different ballgames when it comes to defense. The defense orders are usually very bulky, and if you look at, say, past year or two, the defense stocks, they were trading at many of them at, say, high single-digit kind of P multiples. Now, if you look at, say, last 4 or 5 years, there has not been any material change in earnings. But yes, given the fact that there's a lot of government focus on Make in India, the order flow has improved. There's a probability that the growth rates will increase in future. But having said that, given the focus of the government, increased order flow, and the kind of multiples they have trading earlier, so there has been very sharp rally in many of these defense stocks. But having said that, the space continues to look good over the medium term with just one risk, and that is a political risk, which is significantly attached to the defense stocks. Now, when it comes to railways, I think railways is another segment which on the capital goods side is getting a lot of government attention. There's a lot of talk about the increase in the outlay by railways when it comes to, say, capex, modernization, and all that stuff. So I think that is actually resulting in your increased orders for all the railway-related companies, and the stocks are doing well. Now, I believe that both the themes are potent in the long term, but at the same time, they are driven by the initiatives which are taken by the government and not purely by the private sector. So as long as the government is, you can say, attuned to investing more in these sectors, initiating more Make in India, developing the railways, and till the time the order inflows will continue to be strong, and the markets will continue to remain excited about these companies.
The one other segment which is going to be in focus is going to be OMCs. And remember, like how Soumit was highlighting that Saudi Aramco has indeed hiked the contract price of propane for the month of September. This is going to push propane prices higher than gas prices next month. Though brokerages are saying that this is net neutral for OMCs and the price hike applies no over-recovery, and over-recovery so far are going to be sufficient at least for the fiscal. The falling GRMs as well, that's going to impact OMCs as well. This in any case has been one of the weak links in the markets of late, so maybe some more pressure for some days to come. Gujarat Gas though, a second price hike has been undertaken, so that's going to be one stock you can expect some buoyancy there. And then, of course, some of these names like an Amber, Dixon Technologies, these stocks, of course, have been much the market favorites as well of late. They've seen a target price hike by Jefferies. So these are going to be some of the other names which are going to be in focus. But yeah, Nikunj, I mean, post your interview with the petroleum minister, you were making the case for OMCs.
No, Aisha, I mean, you can always make a case for OMCs in terms of what the government intention is. But however, in terms of the truism of how the energy policy have been followed in India, in spirit, you may have deregulated the sector, but every time when crude prices go higher, in a bid to control inflation, in a bid to ensure that the common man is protected here, OMCs have to play a dual role. They have to play a role of protecting shareholder value and managing and being a good corporate citizen, and that really works for minority shareholders, and we've seen evidence of that. Even though same time last year GRMs were on a tear, oil marketing companies did not enjoy the full benefit of them. My limited point here is that for oil marketing companies, even though everything in the PSU space has got re-rated from defense to railways to PSU banks, even power, I think OMCs, just because they are cheap, I don't think one should really buy into them. I keep on hearing things, okay, everything in PSU has gone up, now what's next? Could it be OMCs? They're cheap, single-digit P multiples. But you don't have a concrete evidence in which way how the profits would move, and that I think is the restrictive factor. For every other defense sector, great things have happened. Power sector reforms have kicked in, defense orders, defense companies are getting orders, railway capex is very strong, PSU banks have started on a new cycle. For every other government-facing business, with the exception of ONC, the terrain has changed, the policy has changed, the attitude has changed, the managements have got a renewed vigor now. But in OMCs, I think that the compulsive factor which is at place. I think that's my understanding.
Yeah, that's the take coming in on OMCs. The one other pocket which is seeing some buoyancy of late has been mid-cap IT, and that was the case yesterday as well, right? Everything from a Persistent, which spiked up about 3%. There was Coforge, which held out smartly, about a 3% bump up coming in there. And Nooresh, I mean, the fact of the matter is that the series gone by, one of the key winners sectorally has actually been Nifty IT. Do you think the worst is now behind us? And would you look to go long on any of these names?
In the IT space, we are seeing very different moves. So look at Persistent System, broke out yesterday finally above that 51, 5200 mark, a new all-time high for the stock. At the same time, you have a Wipro which is struggling on the downside. So the focus should be clearly on the mid-cap IT names and clearly the ones which are outperforming on a relative basis. The next one on radar is a LTI Mindtree, which over the last almost 8 to 10 months has resisted around 5250 to 5300 levels. If that breaks, that could be the next one which could outperform. The rest of the mid-cap names have already done really well. So Persistent comes in, LTI Mindtree comes in. In the larger names, this is HCL Tech, which looks interesting. The stock is getting resisted around the 1200 mark, which was the high of 2022. So that's one more stock which looks interesting. So out here, there are interesting names, but the heavyweights, which is where you see like an Infosys, the peak was around 1900 back in 2021-22, and the stock is at 1400. Then you have other names like Wipro, which is still down from closer to 700 plus down to 400 and still struggles. So the case is a lot of heavyweights do not look interesting. The mid-cap names, one by one, we've seen a lot of them do well. Birlasoft actually has gone up 30% after the breakout. So the focus should be stock specific on the IT names. Many names could outperform going forward, but the Nifty IT index will not outperform in a big way unless the heavyweights do well. So I would go with Persistent, LTI, Mindtree as the top picks as of now.
Amnish, why is mid-cap IT doing well? Is it only that they are niche and they're specific? Because whether it's Persistent or LT Mindtree, there is a strong outperformance within the mid-cap IT space now.
You see, Nikunj, some of these companies are not strictly mid-cap in that sense. For example, LTI Mindtree has quite scaled up now. But having said that, if you look at, say, the entire piece over here, I think the growth rate of many of these mid-cap companies has been superior than the large-cap companies. So that is one. The second is that markets always love growth. If you look at, say, past 3 to 6 months, and IT services is not different. The mid-caps and small caps, they have significantly outperformed the large caps. So the market today is running after growth. The market is chasing the growth, and wherever the growth is, irrespective of the fact that whether it is a mid cap or a small cap, market is ready to pay them even premium to large caps. So I think that is typical of, I would say, a very broad-based rally which is playing out, and IT is not very different over here.
Amnish, what's the take on auto? And I say that because, today you'll have all the monthly sales data come in. We can already see the print coming in from Escorts. Total sales at 5,593 units. And then, of course, yesterday, Maruti made it to that 10,000 rupee per share mark, a lifetime high for itself.
You see, auto as of now is doing well. In fact, in the last quarter also, I think two-wheelers was a segment which was slightly under pressure. And even the PVs were, I would say, they posted average performance. But I think tractors last month was also reasonably good, and so were the passenger vehicles. So I think the same trend is likely to continue, at least in the, I would say, near to medium term. In the next few months, particularly this festival season is going to be crucial. But definitely, I think as of now, your particularly PVs, they seem to be on the strong wicket. And your CVs, they are holding on to the gains. This year, we might not show, say, more than 4, 5% or 6% growth on an aggregate. But having said that, the segment as of now is holding on quite well.
But Escorts has just been one of those phenomenal wealth creators. It's up. Hold your breath sometimes. We always think it's Titan and HDFC Bank and Bajaj Finance which have created wealth in the last 10 years. Escorts was a 3-digit stock, and a 3-digit stock has become a 4-digit stock. In this year, it's up another 47%. I don't know what is, I mean, this tractor cycle is doing okay, but for a stock to give a return of 40x in last 10 years, I mean, that's breathtaking by any yardstick. And one more stock which falls in this kind of a bracket is actually Tube Investments. We don't talk about it, but that's one stock which has again given breathtaking returns in last 10 years. Last 10 years, Tube Investments, 127 has become 3,000. Wow. Amnish, Escorts existed, I mean, it went public in 1990s, but the gains have come in last 10 years. And similarly for Tube Investments, I mean, it's an old company owned by one of the oldest corporate group in South India, but last 10 years, the stock has taken a giant leap forward. Why is that? I mean, what has happened in Tube Investments, Escorts, which is so transformatory?
You see, Nikunj, in fact, Escorts, I think it didn't get listed 20, 30 years back. I think it was one of the companies which was rated by Savraj Paul way back in, I think, late 70s or early 80s for a takeover. So it's, I think, it has been listed from donkey's years. What has happened over the years is that you see, Escorts had been an underperformer. It was present in practically every segment, ranging from, say, a two-wheeler to, for example, it was there in telecom and all. And over a period of time, they continued selling businesses one after the other. Now, what they left in the end was some sort of, you can say, mainly the tractors as well as some railways and construction equipment business. Now, what has happened in Escorts, particularly in the last few years, is that Escorts is now a subsidiary of Kubota, which is you can say, a big Japanese MNC. So the management focus has come in. And there is more now interest in this company because Kubota is likely to make Escorts as a sourcing hub for their global operations. And so the growth of this company might not be totally dependent upon the growth of the Indian tractor market. So that has been an instrumental factor in re-rating of Escorts, say, in the past few years.
Thanks very much, Amnish, for joining in and sharing with us your outlook on the markets. Let's find out what those mid-cap trading calls are. By the way, a quick check-in on the pre-open rates. And as of now, it's doing precious little, flat as ever, around the 19,266 mark. That's on the Nifty. So, Nooresh, what's the top mid-cap recommendation?
So that would be a buy on delivery with a stop loss at 420 and a target price of 500. The stock fell from 600 odd levels all the way to 300. For the last 8 to 10 months, it has consolidated. 400 was the recent high, then it paused at 420. Yesterday was a good volume pick as well as a close above the 430 mark. So it looks like a short-term breakout in play and could start trending from here.
Have a delivery. That's a stock that Nooresh has got his eye on. What about you, Kunal?
Voltas is something which I would recommend at current levels. The stock has given a flag pattern breakout in the daily charts, also broken past above its 200 moving average. So would suggest a buy with 920 as a target, stop loss at 835.
Let's move on and let's tell you what else is happening outside the world of India. Equities and Hong Kong stock markets will remain closed today after the government hoisted storm warning signal as Super Typhoon Saula approaches the city, bringing heavy rain and gales to the financial hub. The typhoon, in fact, is expected to be among the 5 strongest typhoons to hit the city since 1949. And Canadian e-commerce giant Shopify has inked a deal with Amazon to offer a Buy with Prime program to merchants. The Buy with Prime feature allows online consumers the option to purchase their items using the store payment method in their Amazon wallet. Shares of Shopify were up nearly 10% on the back of this news overnight. And the India Alliance will, after concluding their informal meeting on Thursday, is all set to now get into poll mode. The Alliance is likely to announce a coordination committee of 11 members from principal opposition parties and set to unveil a logo for the bloc during the formal meeting in Mumbai today.
Meantime, as Delhi is all set for the G20 summit, the key areas in central and New Delhi districts are expected to remain out of bounds for Delhiites during the coming weekend. That's the 2nd and 3rd of September, as the Delhi Traffic Police will be holding full dress rehearsals for the G20 summit. And after the successful landing of Chandrayaan-3 on the moon, the ISRO is gearing up for the much-anticipated solar mission. That's Aditya L1. The countdown is set to begin today and the launch is scheduled for 11:50 a.m. tomorrow. Remember, Aditya L1 is going to be the first space-based Indian observatory to study the sun. And just days after clinching a gold at the World Athletics Championship, the marquee star Neeraj Chopra has finished second at the Zurich Diamond League in Switzerland. The world champion has thrown a best of 85.71 meters, just 15 centimeters short of the gold medalist.